May 14th, 2023. Happy Mother's Day. I'm going to start with the lower time frames and just breeze through. But the real parameters that I'm following are to be found in these lower time frames. It's either my 55-minute chart, ABC in progress to 78 region, or on that's the alt. And what I'm really looking for is a follow through on this count, meaning we're already in wave 5 of 2 in progress towards 61. So what's the difference? Well, it's only a $17 difference between these two. But I think it's really going to be one or the other, and I think the parameters are really clear. So if you don't really, it's the first 2 minutes of this video that's going to show what I'm really looking for. And this is my primary idea, is that this was a wave 3. This was a 3-wave bounce, 1, 2, 3 for wave 4. You can see the internal 5 waves of the C wave here. Oops, ABC for wave 4 done. Now we're beginning wave 5, which aims towards 61. The parameters would be 73.89 to the upside. If this comes back up and gets above 73.89 to the upside, I think we're in a B wave going up. If it stays here and either I've labeled this wrong, this is very nano, but if this is already done 5 waves, which is possible, then the bounce should not get much above this area. It maybe dips into this gray resistance zone and rolls over. If it needs to come down a little more, which is fine, then I'll drag this a little lower, and then it'll still give you parameters for where the bounce should not exceed. All right, so but back much below 68, just call it 68.50, then I think it's fair game. We're going down to 61 at least. That's my view. So that's it. You could just stop watching the video now because those are the parameters. But I'm going to go through a little bit more. The alt case is that this is an ABC, which is really just an A wave, and that now we're completing a B wave, which is another 3-wave move. A, B, C. For a B wave, could extend a little lower, and then you're going to get wave C all the way up to 78. All right, and then if we just keep zooming out, I'm doing this backwards this week, starting with the nano. We just keep zooming out to the 4-hour, and you can kind of see more clearly the parameter 73.89, which is right into this supply-demand zone, which I've called support in the past. Now I call it resistance. So it also lines up great with LA wave. So if you get above 73.89, I think it's much more likely you're going to see 78 at a minimum. If it can't hold this region, I was saying 68.50, which is just sort of down. So if it keeps coming, you could get a bounce, but it won't. It'll come up back, maybe retest this resistance, and then rolls. So this is the region, I think, where the decisions get made for the $17 difference between going up here or going all the way down to the 618. By the way, the 6101, it's the 618. It's a perfect target for wave 2 after 12 months of this madness in crude oil. Good for scalping, horrible for swing trading. You got to be nimble. Anyway, so that's the 4-hour. And the technicals are bearish, but that can change in a 4-hour period. But at the moment, they're bearish. So now we look at the daily. All the technicals are bearish. Here you can see real clearly A versus 3. Either this is a wave 3, and we just completed the wave 4 bounce in 3 waves, and now we're beginning work, maybe have completed wave 1 of 5, which points down here. I like this because these support zones have been on here forever, and maybe we're finally chipping away, and maybe you just need one more shove down and exceed this support, but with a wick similar to what we have here. And then just as I got long on this wick and I got long on this wick, I'm going to do the same thing. If you get a nice move down that scares the crap out of everybody, then I'll get long. Okay, that's the daily. And then the weekly, the last thing is kind of interesting on the weekly. I like the weekly. I don't trade it, but there's definitely clues on the weekly. First of all, it's been bearish for almost a year now. Of the technicals in general, all this coiling action, it always resolves to the downside. It has been resolving to the downside. Look at this. This is what I want to talk about, the weekly squeeze. On the lower time frames, the dots can blink on and off, but on a weekly chart, That doesn't happen. So the dot is gone. You lost a dot last week. You get 5 dots, 5 weeks in a row. And what that suggests is that when the dot releases, what is going to happen is a greater than expected move. And for that to happen on a weekly chart is meaningful. It just means either it's, well, that's why there's a $17 difference in our target. So you either got $8 to the upside or $8 or $9 to the downside. That's juicy. That's worth trading. And this clue, the dots disappearing at the end of last week, during the week they can blink on and off, and that has happened, and I'm aware of that, and I keep an eye on it. But when it stays gone, the odds of that dot coming back are extremely low. I went back to 1990, so I went back 32 years, and I do not find a scenario on this tool where the dots disappear after at least, well, there was 1 week where you got 1 dot, so I'm discounting that. But every other week when you have 3 or more dots, when they disappear, they stay gone. So the dot has disappeared, and I expect it to stay gone, which just means once this starts moving per the parameters that I just showed you on the lower time frames, I'm going to have higher confidence that it's going to follow through. That's really my point of this clue. Whichever parameter happens on the lower time frames that we were just talking about, 73.89, call it 68.50, whichever way this goes, I believe is highly likely that it is going to follow through, whichever way that goes. So there you go. 32 years look back, and that gives me a confidence to size up is really what I'm saying. This is my personal video trade journal, by the way. So note to myself, I'm going to size up for whichever way this goes. There you go. All right. Happy Mother's Day, guys, for all the moms out there. Enjoy your Sunday, and good luck.